Now, in the past, George Osborne's been accused of using his budgets to tinker at the margins or pull cheap tricks on his political opponents. Perish the thought a politician would do that. But the big surprise in this year's statement was a genuinely radical shake-up, as Polly was saying, of the pension system that will affect most people who've yet to retire. At the moment, everyone's saving money into a defined contribution pension, that's the type most common in the private sector, can take 25% of the pot as a tax-free lump sum when they retire. With the rest of the money, most people are currently forced to buy an annuity, which is a form of insurance that provides a guaranteed monthly income until you die. Annuities have hardly been a bargain since interest rates were slashed following the financial crash. Even someone with a very sizable £100,000 pension pot would only get an income of £5,800 a year at current rates. From April 2015, pensioners won't be forced to buy an annuity. Instead, they'll be able to do what they like with their money, even taking the entire pot as a lump sum, but paying tax on 75% of it. Pension Minister Steve Webb told the BBC this week he was relaxed about the idea of pensioners blowing the lot on a Lamborghini. Though with an average pension pot actually closer to around £30,000, you'd be more likely to end up with a Skoda than a supercar. And the lesson from Australia, where a similar system is already in place, is that most newly retired people who take the cash are more likely to spend the money paying off their mortgage, helping a family member to buy a property, or investing the money elsewhere. Well, earlier I spoke to the Pensions Minister. He's a Lib Dem. He's called Steve Webb, and I began by asking him if he still thought the reforms might lead to pensioners splurging their savings on supercars.
What this reform's about is treating people as adults. For far too long we've said we're going to make sure you save for your old age, and then we're going to control each year how much you spend and what you spend it on. And really what we're saying now is because we've reformed the state pension and made sure people get a floor that's just clear of the means-tested benefit level, then we can be much more relaxed about what people do with their own money. The evidence is that people who've been frugal and saved hard for their retirement actually don't generally blow the lot. They will spread it out, and there's good tax reasons for doing that. So it's simply treating people as adults and giving them choices that they should have had all along.
But it is a red herring, isn't it? The average pension pot is between 25 and 30,000. Lamborghinis aren't an option, correct?
I gather there's only about 5,000 people who retire each year who could buy a flashy Italian sports car. So for most people, it's things like paying off a mortgage, maybe paying off any outstanding debts, but maybe it's spending a bit more of their money earlier in retirement when they're perhaps a bit more fit and able and can enjoy it a bit more. What we will do, though, is give people guidance. We will make sure that when they retire, there's someone there to have a conversation with, to talk them through the implications of spending the money early, the options for investing it, and that's something we just don't have at the moment for most people. So this will be a real step forward.
Is it not the case that even if you've got a much bigger pension pot, say £500,000, which is way bigger than the average, even then the marginal rates of tax will be a disincentive to take it all out at once, because you lose huge chunks of it at the 40% band and then the 45% band?
That's right. The tax system gives you an incentive to spread it out. So, for example, if the tax threshold's a bit over 10,000 and the state pension's a bit over 7,000, then the first 3,000 you draw out in any given year is completely tax-free, and then the next band is at 20%. So actually spreading your money will mean you pay less tax, which is another reason why, in general, people won't blow the lot up front. They'll have a good reason to spread it out through their retirement.
Now, for market sensitivity reasons, you kept this policy quiet. None of it was leaked, not even a hint. So how did you test it? How did you make sure it was going to be robust? You couldn't do any consultation.
Well, I've been talking about freeing up the annuity market for well over a decade. The idea that we give people more choice. The government's already relaxed some of the rules during this Parliament, so it wasn't a completely new idea. We know around the world, places like Australia and America, people have these kind of freedoms, so we already have some things to judge by. And we are going to spend the next year talking to people, working it through. There's a full 3-month consultation, so we believe the principle is right. As a Liberal Democrat, I want people to have choices about their own money, so we think the principle's right. But there is a lot of detail still to be worked out, and we're very much in listening mode about how exactly we implement it.
But when you announce something which you can't do widespread consultation for the reasons that I've given, you do run the risk of unforeseen consequences. For example, pension companies this morning are indicating, hey, you, the government, you were looking for £25 billion of infrastructure investment from us. You've hauled our shell below the waterline. That may not happen now. What do you say to them?
Well, we did talk internally about the implications for infrastructure. That was something we clearly thought about. But I think it's important to stress that there will still be plenty of annuities sold. The insurers will have to give better value than they have done in the past. But it seems to me that there's still going to be long-term investments. Many people don't even take the tax-free lump sum now. And so those sorts of people, they just want to turn their whole pot into an income. That's backed by an annuity. So there'll still be a need for long-term investment. You know, I understand the insurance companies are lobbying and they're not very thrilled about all of this, but I'm convinced that there'll still be plenty of money for investment in infrastructure. And of course, if the Chancellor's pro-savings measures work, the ISA changes, the reduction in tax on savings and so on, that will generate more long-term savings.
Answer this for me, Minister. With no requirement now to buy an annuity, surely it's the case that pension pots are just another ordinary savings fund. So why should they continue to get favourable tax treatment?
Well, bear in mind that a lot of the tax treatment of pensions is simply tax deferred. So most people pay tax at the standard rate. If they put the money into a pension, they don't pay tax when they earn it, but they do pay tax when they draw it in retirement. So a lot of the headline figures about tax relief are about simply reprofiling tax. And of course we will still have automatic enrolment into workplace pensions. We do want people to build up because, you know, at 20 and 30, nobody thinks about retirement. So it is important we have a good tax regime. You get an employer contribution into a pension, which you don't get into anything else. So it's still vital that people do reach retirement to have these new choices with a decent-sized pension pot.
But pensions got tax breaks because they were meant to provide an income in retirement. That was how it was structured. That's no longer a requirement because of the changes your government's announced. Surely that undermines the case that if they get tax breaks, other forms of savings should get tax breaks.
Well, other forms of savings do get tax breaks, of course.
Not like pensions.
We heard in the budget ISAs, in a sense, you put out of your post-tax income, but then the return is tax-free. So you either get tax break on the way in or on the way out. It amounts to much the same thing. But the point about pensions is you're simply deferring your earnings. Instead of taking them while you're in work and paying tax then, you draw them when you're retired and pay tax then. So most of it, there is a bit where higher rate taxpayers get an extra kick whilst they're working and then retire on the standard rate. So there are issues about the top getting too much tax breaks. And again, as a Liberal Democrat, I want a fairer system. So we're looking at whether the top get too much. But the basic principle that you pay tax when you get the income seems right to me and isn't affected by these changes.
You've announced also, the government, some saver-friendly measures. Are we right to look at them as a consolation prize because savers have suffered from the government's policy of keeping interest rates abnormally low?
Well, it's certainly the case that very low interest rates have been a huge boon to people of working age with mortgages, and people who are retired have said to us, yes, they feel that they could have got a better deal on their savings, and so things like the new pensioner bond that National Savings are bringing in next year will specifically address that issue. So I think there is a recognition that whilst we've done the right thing by pensioners on the state pension, so we've brought in the triple lock to try and make that go up at a decent rate each year, certainly some pensioners with savings have felt the hit and will benefit from these changes.
But why just pensioners? Everybody who's saved has felt the hit. Why shouldn't savers who are not pensioners get the same help? They've been hit by low interest rates too.
Well, many of those of working age, as I say, actually have mortgages and have benefited hugely from low mortgage rates, whereas predominantly people in retirement have either not got a mortgage or paid it off, so they haven't had the benefit. Obviously, for people of working age, the big increase in the personal tax allowance, another Lib Dem priority delivered in the budget, will have helped people of working age, didn't help pensioners because their tax allowances have been frozen. So I think it's a myth to say the budget was all about pensioners. Actually, it had benefits across the age spectrum.
And yet you've done all this for savings, and yet even when the OBR, the Office for Budget Responsibility, takes into account your new measures, it still shows that over the next 5 years, households will save less and less. Indeed, the savings ratio falls by 50%. You haven't done enough.
Well, one of the things we know is the economy is picking up strongly, and as people have more confidence about the future, then they may be more willing to consume now. So without these measures, it may well be that the savings rate would have fallen further. Clearly, we do want people to spend, we do want people to save. It's getting that right balance, and I think these measures reward those who've saved, but also recognise that as the economy picks up, people will want to spend more of their own money, and it's just trying to get that balance right.
Final question. I mean, you make the point that because pensions are moving to be less means tested, that if people are a little profligate with their private pensions, they'll have the state pension to fall back on and it will be higher than it's been. But it's also the case that in these circumstances, they will still be entitled to housing benefit and even to perhaps some council tax benefit as well. Do you know by how much this could put the welfare bill up?
We think the impacts will be relatively modest because, as I say, the sorts of people who save for a pension, who make sacrifices when they're at work, are just not the sort of people who get to 60 or 65 and think, right, I'm going to blow the lot for the great privilege of claiming council tax benefit or its replacement or housing benefit. So, yes, there will be people at the margins who we end up spending more on, and we'll do some further modelling on that. But we think the impacts will be modest because actually most people who retire with some capital, yes, they might spend a bit at first, but most people want to put a bit of money by, people want a bit of money for their funeral, people do like to save even into retirement. So the myth of the spendthrift pensioner, I don't believe. Overwhelmingly, this is about treating people as adults with their own money, and I think it's been rightly welcomed.
All right. Ever fancied a Lamborghini yourself?
Well, if you turn the camera around, you'd see my two-door Corsa parked just down the road. But having given them a lot of plugs, I'm hoping I might see one with a ribbon outside the house shortly.
It's much more Lib Dem than a Lamborghini. Steve Webb, thank you very much.